In this video, we'll share with you our 7 brand new indicators on TradingView that will make you a better and more profitable trader. These indicators work great in the crypto and stock markets. They can also be an excellent enhancement to your existing strategy. We'll share with you the best time frames and settings for each indicator, so make sure to watch the entire video. Let's dive in. On the 7th place, we have an amazing indicator that won an Editor's Pick Award. Only a few traders know about this tool, and even fewer know how to use it properly. It's called Task 2024.07 Gaps and Extreme Closes by Pinecoder's Task. This indicator is specifically designed for trading stocks. It provides analytical insights into stock price behaviors following significant price moves. The information about the frequency, pullbacks, and closing patterns of these extreme price movements can aid in developing more effective trading strategies by understanding what to expect during volatile market conditions. This script follows Perry Kaufman's study and helps provide insight into how prices often behave after significant price changes. This analysis can help you establish price movement expectations and potential strategies for trading such occurrences. In the indicator settings, you can choose the output, opening gaps or extreme closes. In this video, we'll focus on the opening gap strategy. There is also an option to choose the price direction, upward or downward. If you decide to trade in both directions, simply add another gaps and extreme closes indicator to your chart. Before I teach you this profitable strategy, let's understand what a price gap is. A stock gap is an area of discontinuity in a securities chart where its price either rises or falls from the previous day's close with no trading occurring in between. Now that we've learned what a stock gap is, let's see how we can use this indicator to profit from such price moves. With this trading strategy, we will look for gaps in price that caused 5% or more price increase or decrease. Currently, we're looking at the Tesla price chart on the 15-minute time frame. According to the following chart, there was a price gap that caused a price increase of over 12%. Such a gap is often followed by an uptrend. However, we cannot buy the stock right after such a gap, as we might not get the best price. So, the next step is to look for a pullback. By looking at the indicator graph, we see that gaps over 11% cause a 2.23% pullback. So we place a buy limit order 2% below the upper gap level and wait for maximum 10 candles for the price to pull back. Set the stop loss in the middle of the gap and a target of 2 times the risk. This trading strategy can be applied to short trades too. Just use the opposite rules. On the 6th place, we put an indicator called Volume Bull-Bear Activity. This powerful volume indicator generates a summary of bull and bear activity for 20 symbols. For each symbol, 2 bars are displayed, colored green and red. The indicator shows real-time activity, not volume data from the past, which is super helpful. In the indicator settings, you can select a time frame for volume analysis. It is recommended to select the same time frame you're viewing the stock in. You can also add any cryptocurrency, stock, or forex pair for bull and bear analysis. This volume indicator could be a great enhancement of your current strategy by filtering out low-quality trades. The buy and sell signals or setups can be filtered using 2 methods. The first method involves the following. Before opening a buy trade, you should check if the bull activity in the current candlestick is greater than the bear activity. The second method of protection is to open trades only if there is sufficient volume on the market. It is possible to accomplish this by setting a specific volume benchmark below which the trades are not allowed to be initiated. Save this indicator to your library, and let's explore the next tool on our list. This new indicator is called Bayesian Trend Indicator Chart Prime. In probability theory and statistics, Bayes' theorem, named after Thomas Bayes, describes the probability of an event based on prior knowledge of conditions that might be related to the event. The Bayesian Trend Indicator is a powerful technical analysis tool designed to assess the direction of price trends in financial markets. At its core, the indicator utilizes multiple moving averages, including the exponential moving average, simple moving average, double exponential moving average, and volume-weighted moving average. The indicator begins by calculating the trend for both fast and slow moving averages using a smoothed gradient signal function. This function assigns a numerical value to each data point based on its relationship to historical data, indicating the strength and direction of the trend. Next, the indicator calculates prior probabilities using the trend information from the slow-moving averages and likelihood probabilities using the trend information from the fast-moving averages. These probabilities represent the likelihood of an uptrend or downtrend based on historical data. To visually represent the trend direction, the indicator colors the bars on the chart based on the posterior probabilities. Bars are colored green to indicate an uptrend when the posterior probability is greater than 0.5 or 50%, while bars are colored red to indicate a downtrend when the posterior probability is less than 0.5 or 50%. Additionally, the indicator displays a dashboard on the chart, providing you with detailed information about the probability of an uptrend, as well as the trends for each type of moving average. The fourth indicator on our list is ICT Turtle Soup by Flux Charts. For those of you who like simplified trading, this indicator is a must-have. This indicator's buy and sell signals are based on liquidity grabs and market structure. It uses higher time frames for entry confirmations. This indicator uses average true range when placing the stop loss and take profit levels. Average true range calculates the average size of a candle, and the indicator places the stop loss level using ATR times the risk setting determined by the user, then places the take profit level, trying to keep a minimum of 1-to-1 risk-reward ratio. This indicator is an all-in-one suit for ICT's turtle soup concept. It's capable of plotting the strategy, giving signals, a backtesting dashboard, and alerts feature. The backtesting dashboard allows you to see how your settings perform in the current ticker. You can also set up alerts to get informed when the strategy is executable for different tickers. The indicator works well with Euro-US dollar pair in the 15 minutes time frame. You can customize the inputs to increase the win rate and profit. Add this profitable tool to your favorites, and let's move on to the third spot indicator on our list. Introducing Higher Time Frame, High and Low Indicator by Chart Prime. This magic indicator plots key levels from a higher time frame onto the current chart, aiding you in identifying significant support and resistance zones. The indicator also detects and labels breakout points and can display trend directions based on these higher time frame levels' breakout points. It marks support and resistance points with small square symbols when the current time frame's high or low interacts with the higher time frame's levels. This indicator is ideal for traders looking to integrate multi-time frame analysis into their strategy. The higher time frame levels act as significant support and resistance zones, helping you identify potential reversal or continuation points. The best strategy is to combine this tool with volume and trend analysis and simply buy near support and sell near resistance levels. Here's an example of a profitable beginner strategy with this tool. For this strategy, we'll add another indicator, which actually takes our second spot. This tool is called a price ratio indicator. It uses a similar concept to RSI oscillator, but the reading is much more accurate. One of the best ways to combine these two indicators into one strategy is as follows. It works almost every single time. Let's start with an example of a long trade. The rules are simple. First, the price ratio indicator must become oversold. Second, the high and low indicator must produce a buy signal near support. The signal must occur not during, but after an oversold market condition. Set the profit target at the midpoint. For short trades, the rules are the opposite. First, the price ratio indicator must become overbought. Second, the high and low indicator must produce a sell signal near resistance. The signal must occur not during, but after an overbought market condition. Set the profit target at the midpoint. Finally, let's unveil our most powerful and accurate TradingView indicator. It's called the TIQ kit. This indicator has just been released. It is an updated version of my TradeIQ toolkit. I believe every trader should have this indicator in their toolbox to become consistently profitable. It includes brand new features like TradeIQ Tracer, Smart Volume Profile and Histogram, predictive ranges, and super accurate support and resistance levels. With this indicator, you can build any strategy that suits your needs. It works in all time frames and markets. What sets the TradeIQ toolkit apart is its multi-dimensional approach to price analysis. Unlike other indicators that focus on particular areas of trading, the TradeIQ tool offers a broader approach. It combines price action analysis, trend identification, and volumetric analysis, offering a more accurate view of the market than any single indicator you know. TIQ kit settings can be customized to fit different market conditions and trading styles. For those of you who can't wait to try and test this indicator out, click the first link in the description and get your TIQ kit risk-free.